All right, folks, let's talk about money. Stay savvy and subscribe. The thing that makes the world go round. We're so used to pulling out our wallets, flashing plastic cards, or tapping our phones. But have you ever stopped to think about what happens behind the scenes? It's a wild ride, my friends. And it's about to get even wilder with this whole cryptocurrency thing. So, buckle up because we're diving deep into the world of cash versus crypto. Now, let's talk about the elephant in the room, cryptocurrency. Bitcoin, Ethereum, Dogecoin, these are just a few names you might have heard. Crypto promises a future where money is free from the grip of governments and banks. A future where transactions are global and instantaneous. Sounds pretty good, right? But is it too good to be true? That's what we're here to find out. We'll explore the ins and outs of crypto, and by the end of this, you'll have a better understanding of this revolutionary technology. Where does that crisp dollar bill in your pocket actually come from? It doesn't magically appear out of thin air. Most of the money we use isn't printed by some dude in his basement with a counterfeiting operation. It's actually created by institutions called central banks. These institutions are the puppet masters of the financial world. They control the strings of the money supply. They want to keep things balanced, just like Goldilocks with her porridge. So, how do these central banks actually create money? Well, it's not as simple as firing up the printing presses. Central banks have a few tricks up their sleeves. One way they inject money into the economy is through something called open market operations. It's basically just the central bank buying or selling government bonds. Another tool in their arsenal is setting reserve requirements for commercial banks. And lending, my friends, is where things get really interesting. Now, here in the good old US of A, our central bank is called the Federal Reserve, or the Fed for short. They've been around since 1913, keeping the American economy humming along, well, most of the time. The Fed's got a tough job. They've got to keep inflation in check, promote full employment, and make sure the financial system doesn't go haywire. It's a delicate balancing act. The Fed plays a crucial role in managing the US dollar. They're the money maestros, conducting the symphony of our economy. So we know the Fed creates this money, but how does it actually end up in our grubby little hands? Well, it ain't like they're airdropping stacks of Benjamins from helicopters. The government plays a big role here. When the government needs money to build roads, pay teachers, or fund those top-secret Area 51 projects, they get it from the Fed. And when that money flows out into the economy, it trickles down to us regular folks. It's like a game of hot potato, but instead of getting burned, you get to buy stuff. Now, here's where things get really wild. Commercial banks, those places where you deposit your hard-earned cash, they're in on the money-creating action too. And they do it through a little something called fractional reserve banking. When you deposit money in a bank, they don't just keep it all locked up in a vault. No, they lend out a big chunk of it to other people who need loans. And when they lend that money out, they're essentially creating new money that didn't exist before. The money supply just keeps growing. Now you might be thinking, wait a minute, isn't that kind of risky? What if everyone decides to withdraw all their money at the same time? And you'd be right to be concerned. Fractional reserve banking is kind of like a financial high wire act. It works as long as everyone doesn't panic and run for the exits at the same time. But that's a whole other can of worms we don't have time for today. All right, let's rewind the clock a bit. Way back, before iPhones, before credit cards, even before those little plastic coins they give you at Chuck E. Cheese. Back then, people didn't have fancy money like we do today, so how did they buy stuff? Well, they bartered. Imagine this. You're a farmer and you've got a whole bunch of chickens running around laying more eggs than you can handle. You need some new tools, but the blacksmith down the road, he's allergic to feathers. It wasn't the most efficient system. Eventually, people got tired of lugging around chickens and goats and started using commodities as money. We're talking things like gold, silver, even seashells. Anything that was relatively rare, durable, and divisible would do the trick. Now, these commodities had intrinsic value. Gold was shiny and people liked shiny things. Using commodities as money was a step up from bartering. It was more convenient, for one thing, but it still wasn't perfect. Fast forward a few centuries, and we arrive at the era of fiat money. That's the kind of money we use today. Dollars, euros, yen. It's not backed by gold or silver or seashells. It's backed by the government's promise that it's worth something. Now you might be thinking, wait a minute, a promise? That's all it is? Well, that's the thing about fiat money. It relies on trust, because trust can be broken. Okay, so we've established that money has had a bit of a makeover over the years. We've gone from chickens and seashells to shiny metals, and now to, well, pieces of paper. But what happened to that whole backed by gold thing? Weren't we promised something tangible to cling to? Well, once upon a time, many countries, including the good old US of A, operated on something called the gold standard. And so, fiat currency was born. Fiat currency is like that friend who always promises to pay you back next time but never quite gets around to it. It's not backed by anything tangible, just the government's word and everyone's collective faith in the system. It's basically a giant confidence game, and so far it's working out, for now. But what happens when that trust starts to waver? What happens when people lose faith in the government's ability to manage the economy? Well, things can get a little hairy. Now, fiat money isn't all doom and gloom. It's got its perks. It's flexible, allowing governments to adjust the money supply to respond to economic conditions. But it also comes with a whole set of anxieties. Inflation can erode the value of your savings. And don't even get me started on government debt. Stay tuned. All right, folks, let's dive into the meat of the matter, the case for cryptocurrencies. One of the biggest selling points of crypto, like Bitcoin and Ethereum, is decentralization. Unlike traditional money, which is controlled by central banks and governments, crypto operates on a decentralized network of computers. This means no single entity has control over it. Decentralization brings a lot of potential benefits. For one, it can reduce the risk of corruption and mismanagement. Another major advantage is efficiency. Transactions with cryptocurrencies can be processed quickly and with lower fees, especially for cross-border payments. But let's not get carried away just yet. Now, let's talk about the not-so-rosy side of cryptocurrencies. One of the biggest challenges facing crypto is volatility. If you've ever followed the price of Bitcoin or any other cryptocurrency, you know it can be a wild ride. Prices can skyrocket one day and plummet the next. This makes crypto a risky store of value. Imagine trying to do your monthly budgeting when the value of your money can change drastically overnight. It's not exactly practical for everyday transactions. People need stability and predictability in their currency, which is something traditional fiat money generally provides. Then there's the issue of regulation. Governments around the world are still grappling with how to regulate cryptocurrencies. Some countries have embraced crypto, while others have imposed strict regulations or even banned it altogether. This patchwork of regulations creates uncertainty and could hinder the widespread adoption of crypto. Governments are also concerned about losing control over the monetary system. Central banks use monetary policy to manage the economy, and crypto poses a threat to that control. If cryptocurrencies were to replace traditional money entirely, it could undermine the ability of governments to implement economic policies effectively. So, while the idea of a decentralized, efficient financial system is appealing, we can't ignore these significant challenges. Volatility and regulation are major hurdles that need to be addressed before crypto can truly replace traditional money. Let's discuss one of the biggest hurdles for cryptocurrencies adoption. For crypto to replace traditional money, it needs to be widely accepted and used. This involves overcoming barriers like technology, education, and trust. The tech-savvy might find using crypto easy, but it's complex for many. Setting up a wallet and understanding private keys can be daunting. We need user-friendly interfaces and seamless integration. Next, education. There's a steep learning curve for understanding cryptocurrencies. People need to be educated about the benefits and risks, They also need to understand blockchain basics and asset security. Without education, adoption will remain limited, and then there's trust. People need to trust that cryptocurrencies are safe and reliable. This means addressing security concerns like hacks and scams. It also means building trust in the stability of crypto's value. In summary, while the potential for cryptocurrencies to replace traditional money is there, we've got a long way to go. Overcoming the hurdles of technology, education, and trust is no small feat. But with continued innovation and effort, we might just see a future where crypto plays a significant role in our financial ecosystem. So, there you have it. The potential for crypto to revolutionize money is real, but the road ahead is full of challenges. In the next part, we'll explore some hybrid scenarios where traditional money and crypto might coexist. Stay tuned. Alright, we've talked about the good, the bad, and the ugly of both traditional money and cryptocurrencies. Now, let's get to the million-dollar question. Will crypto replace cash entirely, or are we looking at a future where these two financial systems coexist? It's a tough one to call. On the one hand, crypto has the potential to disrupt the status quo, offering decentralization, efficiency, and transparency. It appeals to a growing number of people who are disillusioned with traditional financial systems. On the other hand, fiat money has the weight of history, government backing, and widespread adoption on its side. It's familiar, it's relatively stable, and it's not going down without a fight. So, what's the most likely scenario? Well, it's probably not as black and white as one completely replacing the other. Instead, we might see a more nuanced evolution, a gradual shift in the financial landscape. Section 2, CBDCs, the government's digital gambit. One interesting development to watch out for is the rise of central bank digital currencies, or CBDCs for short. These are basically digital versions of existing fiat currencies, issued and controlled by governments themselves. Think of it as a digital dollar or a digital euro. Now you might be thinking, wait, isn't that just online banking with extra steps? Not quite. CBDCs would operate on a blockchain or similar technology, offering some of the benefits of cryptocurrencies like faster transactions and lower fees. But here's the catch. CBDCs would still be centralized and controlled by governments. So, while they might offer some technological advantages, they wouldn't necessarily address the concerns about privacy, censorship, or government overreach that some people have with traditional money. It's still unclear how widespread CBDCs will become, but many countries, including China, are already experimenting with them. If they gain traction, they could potentially challenge the dominance of cash, especially for everyday transactions. Section 3, Crypto's niche, finding its place in the financial ecosystem. So, if CBDCs are the government's answer to the digital currency revolution, where does that leave cryptocurrencies like Bitcoin and Ethereum? They're likely to carve out their own niche in the financial ecosystem. Cryptocurrencies like Bitcoin are seen as a store of value, similar to gold. Investors might hold them as a hedge against inflation. Crypto can facilitate faster and cheaper international transactions. DeFi offers financial services like lending and borrowing without traditional banks. NFTs represent ownership of unique digital items. They're gaining popularity in the metaverse. Cryptocurrencies are offering new possibilities and challenging the status quo. It's an exciting time to witness this financial evolution. The world of money is changing, and cryptocurrencies are shaping that change. Section 1. The Future of Money, a Digital Balancing Act. So, there you have it. We've journeyed from bartering chickens to the wild world of crypto, all in the name of understanding this thing we call money. And what have we learned? Well, money ain't what it used to be. Gone are the days of simple, gold-backed stability. We're now navigating a complex landscape of fiat currencies, central bank maneuvering, and the rise of decentralized digital assets. It's enough to make your head spin faster than a Bitcoin price chart during a bull run. But here's the thing. The future of money isn't an either-or proposition. It's not about crypto completely obliterating cash and taking over the world, as much as some crypto enthusiasts might dream of it. Instead, we're likely heading towards a more nuanced reality. Section 2, Crypto Revolution or Evolution. Cryptocurrencies, while not poised to stage a hostile takeover of the global financial system, at least not yet, are undoubtedly shaking things up. They're forcing us to rethink our relationship with money, to question the role of central authorities, and to explore new possibilities for financial freedom and inclusion. Will Bitcoin become the new global reserve currency? Maybe, maybe not. Will CBDCs usher in an era of government-controlled digital cash? Time will tell. But one thing's for certain, the conversation around money is changing, and cryptocurrencies are driving that change. Whether you're a seasoned crypto trader or just starting to wrap your head around blockchain, one thing's clear, the world of finance is evolving. And as with any evolution, there will be winners, losers, and a whole lot of adaptation along the way. So buckle up, folks. The future of money is going to be a wild ride. Subscribe and comment on the video. Thank you.